We're quite optimistic about the small cap universe right now, mainly because there's quite a bit of liquidity in the market right now. The central banks in most countries have been reducing their interest rates, unlike what we're going to see happen in the U.S. So from that standpoint, we're still finding a lot of value in the market. Very stock specific, though. When you look at the earnings growth, there's some companies that we think will be reporting very, very well, while others are not. So I think it's a great year to be a stock picker. I think so far in 2015, we're finding out that it's very much of a year where certain stocks are performing very well and certain ones are not. When we look at earnings growth in Asia in particular, though, it's a little bit different from what we've seen in previous years, where we now see better earnings growth in Asia than the U.S. and some of the global markets. So I think that particularly excites us. When we look at valuations, the valuations are not particularly cheap for the small cap space, mainly because small caps have been outperforming for a number of years. But what we're finding is that there's always value there. They're a bit below where they've traded over the last 5 years or so. And when you look at specific stocks, we can still find single-digit PEs in Hong Kong, some in Taiwan, and some of the other markets, and even in the areas, the companies that are more expensive in the small cap space, we see that they have structural, long-term, strong earnings growth that can make them sustain those valuations as well. There's quite a few sectors that we're bullish on, and markets as well. One of the areas is Taiwan, where we think there's a lot of good opportunities there in the auto parts sector. And this is because these companies are really providing a number of the parts on any given automobile. A lot of those come from Taiwanese auto supply companies. Taiwan benefits because it just has a world-class supply chain on the technology side, so they can be the low-cost producer as well and get model launch and benefit from model launches, particularly from China and the U.S. car manufacturers. So we see some very nice growth over the next few years for these companies. Second would be India, where we see the consumer sector in particularly finally starting to take off in a gradual way. And this is because what we've seen throughout the region in markets like China, further ago in Japan and Korea, when your per capita income reaches $3,000 US, you typically get a takeoff in real consumer spending. And we think we'll start to see that because, quite frankly, the Delhi and the Mumbai consumer have not been buying over the last few years because they had high inflation and interest rates, but now will start to spend money again. The last area is really Korea, where we think that biotech and the pharmaceutical sectors are looking very attractive. Over the last 10 years or so, these small companies have been investing a lot of R&D and a lot of money into either one or two products. And they've been putting all their resources into these. And we feel that right now they're starting to enter what we call a harvest period, such that they'll start to get revenues from those products. And not undertake those clinical trials necessarily, but get out licensing by one of the global pharmaceutical companies, perhaps from the U.S., and in return, they'll get upfront payments, they'll start to get milestone payments, and their earnings can surge. And we think that this is very difficult to quantify at this time, but means there's tremendous upside in earnings for some of these companies. First of all, volatility is really part of the small cap space, and our feeling is that you really have to live with some volatility to get the high returns over the long term you can from this space. We try to make volatility work in our favor, such as when a stock comes down or the whole market comes down. We feel the best defense really is due diligence, knowing the companies, knowing what valuations we want to be buying, what valuations we want to be selling, so we can really accumulate those stocks at low price. And we are constantly making company visits to these companies. We know them well, we keep in touch, and we have 75 investment professionals around the region to keep on top of these companies. What we're looking for over the next few months, throughout the year, is the fact that we're probably going to continue to live with concerns about China and with concerns about Greece, and possibly always something surfacing about a Greek exit. So I think this is part and parcel of what we'll be dealing with, and we feel we can outperform and we can navigate through those waters. But those are probably the main challenges we'll see in the future.